Hi, welcome to the Market Alert for Monday, 23rd of September 2019. So on Friday, the stocks and bond yields sank amid the Quadwich chaos. Is being blamed for this trade turmoil and Powell promises. Well, Powell promises are this, dominating the headlines over the weekend. Fed is to pump 75 billion into the repo market until the 10th of October. And you can see it's making news there. This is some serious money, 75 billion per day to keep pressure on the repo interest rate on the overnight market and providing liquidity. There's a few problems, Houston, to say the least. And now under normal market conditions, we would have seen prices just tumble from here. But of course, we're not dealing with a normal market anymore. And as we look at the daily chart, you can see we were down on Friday. But immediately the market's open. Last night, market gaps higher. We're still stuck in the sideways range, and there is definitely some downside pressure in this market at the moment. I can't think for any reason why the market would go up apart from manipulation. There's absolutely nothing after the market waited for last week's reduction in interest rates. And this, I suppose, is one form of QE, backdoor as it is, but printing of 75 billion for the next until October the 10th. Is enough to give the market a bit of juice to move it to the upside, but it's not doing so at the moment. So in Friday's session, you can see that the market became a bit sideways there and trading back down to the 200 bar moving average. This one traded down to the 200 bar, moved higher and created a double top. On the second one, as you will see here from the high to the low, the market came back to 76%, and then here also market 76 before whatever the announcement was, either trade talks or something, sent the market sailing to the downside 150 points. The market then bounced. I'll just remove these, and we see a bit of a bounce going on here. And if you use 76% off just the one price bar, I'll draw it the right way though, from the bottom there, do 76% of this range, the market comes back down to here. And then prices move higher as they bounce. You can see, again, if I do this, 76%, and then the markets move down until the close of trade on Friday. The market's gapped higher, is currently above the DP level and heading towards the 200 bar MA at the moment, but very quiet on the overnight activity there at the moment. Meanwhile, in the pound, at the chart, you can see we were down on Friday. Market fairly quiet at the moment. Market waiting for the Supreme Court's decision. But you can see there Friday's activity, market putting in a retracement, not quite 76, this will be a 62% retracement. Nonetheless, you can see the bounce and just to it there. Also, you've got the R1, and then we close below the 20 bar, close below the 50, and the market trades down to the 200 bar and eventually breaks this and the DP level there as well. The market breaks it, and then we get a bounce back towards it, and then it becomes resistance, and the market has been sideways ever since. And currently in sideways move there, like the Dow, trying to move back to the upside. Meanwhile, news for today, it's European from what we can see, flash services. We've got Draghi out at 2 p.m. actually. He's going to be speaking. He hasn't got long left now. He goes at the end of October to allow room for the criminal that is Christine Lagarde to take over. Convicted criminal, that is. I'm not speaking out of turn there. He will be heading up the ECB. And in the Bitcoin market, it's been a fairly quiet weekend with a bit of movement. I could do with certainly a bit more, that's for sure. At the moment, the market taking out the 200 bar moving average, moving down. and stuck in a bit of a sideways move. Notice though, you start to look at the detail, the market banging its head against the 20 bar moving average, and also if you notice here, from here to here, we've got some support at 99.03. A break of this will see this low tested and then down to this level. If we just draw this in from here to here, you'll see that prices could retest this level as well. So we'll keep those on the chart at the moment. And then in the smaller time frame for yesterday, see the market starting off with a double test here of the lows. Then we get through the 20 bar moving average, prices pull back a bit to Saturday's low. They then drive higher. Where do they stop? Right on the 200 bar MA. They then come back and just trade sideways until they hit this once more. But again, if we go from the high to the low, move this across here, you can see that we're going to have resistance in this area. The market closes below and then we move lower, and also back to the low of Saturday, get very high volume, and then the market bounces there. And just as we've seen on the Dow, it doesn't matter what the market is, again you see prices coming down, finding support here, closing back above the 50 bar, eventually the 20, but then moving back there. So again, we've got the market a bit sideways there for the moment, and again you can see why. Price is held at this level, coming back to here, and then we managed to get through the 200 bar moving average, put in a double top, and then overnight the market sailed straight through, which is not unusual. That's how it likes to trade through. If it can't get through the 200 MA, then it will drive through it if it wants to shake out. And again, you'll see prices coming back and finding a bit of support at the moment. But saying that, it's looking fairly weakish. You want to watch for this low here, see if this is taken out. Okay, just before we finish, implied volatility has been marked up higher on Friday. Big move to the upside, which goes to confirm what I was saying earlier about the weakness in this market. So the option sellers are starting to sense a bit of a down move in this market as well, which is why they've increased the insurance aspect of the options there. And you can see this quite clearly here, where prices have, or the marking up of the implied volatility has increased significantly during Friday's session. And then finally, the Treasury yields still remain inverted, recession on the cards with regards to this market. Okay, that will do it for this one. Keep an eye on Draghi. If you're in the pound, watch out for the announcement from the Supreme Court. It's either today or tomorrow. And yeah, that's it. A bit more activity in Bitcoin. Let's just have a final check before we leave. Oh, there we go. We've already broken the 99.20 there whilst looking at the implied volatility. A lot of volume coming in. Expect a bit of support here and trading down to the S1 as well. So broke that just while we were not looking. So yeah, a bit of nice movement starting to come back into this market, which is great news. Okay, that's it for this one. If there is anything else to report, I will let you know. But otherwise, as ever, thanks for watching. See you in the next one.